That's the societal thing that has me focused on Bitcoin, because I believe capitalism is ending. And people don't want to hear that, but I believe it's ending because artificial intelligence, and Mark Andreessen talks about this is the most unbelievable technology investment scene I've seen. But the competition is intense, and the ability of getting a moat around your business is impossible. You need more storage. You need more places to run these things. The hyperscalers need data centers to supply that. There is a bottleneck that is happening. So the companies, in my opinion, that are going to work this year.
What's going on, guys? Today we got a great episode with Jordi Visser. It is a blast and you're going to learn something. We talk about what's going on with economic policy, high growth, low inflation, housing, why President Trump seems so aggressive on geopolitical stage, what's going on with all of the rare earths and various minerals around the world. And then we also talk about AI, humanoid robots, what's happening with the acceleration, how productivity and growth are coming back. And ultimately, we talk about what's going on in the market and what's going to happen to your investment portfolio. We have a ton of fun, and I think you're really going to enjoy this one. Here's my latest conversation with Jordi Visser. All right, Jordi, we got a lot to get through here. So let's talk the economy first. We now are starting to get a lot of data points that I think are showing the Trump economic policies are working. Now, there's plenty of people who don't like the president. They don't like a lot of things that he's doing. But if we just look at the data, it seems like we have backed ourselves into a high growth, low inflation economy. Is that your read on GDP growth, the inflation, the jobs number, et cetera? Or do you have some different view?
I don't think at this point, I mean, things could change. I don't think they're going to change much, but there's no way to get around the fact that inflation has been far lower than people thought. And then when you add in, and this is an important part for where we are today, I think people they've got short memories. Most economists were calling for a recession.
Great Depression.
Yeah. And they were calling for stagflation at the best case, meaning, well, we're going to have lower growth and we're going to have inflation running on the high side because tariffs are going to go through. Well, both of those were not only wrong, they were wrong in a way that, and I wrote about this week. I basically said capitalism is effectively fractured and ending. And what I meant by that, as you read through it, is we are having 4% GDP. The last 2 quarters that we have GDP numbers for, combined, we're over 4%. Nominal GDP in Q3 was annualized at 8%. And during those 6 months, we created 0 jobs. And today we got the payroll number, but again, it's low numbers, and we revised down more than we created this month from prior months. So there's no way to refute the fact that the labor market is soft. Gas at the pump is down to the lowest level in a few years. And at the same time, housing or rents are coming down across the country. So we have declining inflation. And now what people are starting to talk about, and this is why I'm not going to give the credit to Trump in terms of the overall situation. I do think by the end of this year, people will start to realize that productivity gains are going up. And the question is, how much of this is around artificial intelligence? And I think a really, really high part of it is about artificial intelligence.
Yeah. I always, as I've looked through this, think about the government's job in a weird way with the economy is to create the ingredients or the inputs as best they can for the private sector to, run into the end zone, if you will. And one of the things that seems to be at play here is everyone evaluated, let's just take the tariffs, kind of isolate that as one example. Everyone academically said, okay, if you raise tariffs, that means that you are going to raise consumer prices. Theoretically, that makes sense. I have a lot of things I wrote about where I said, well, if you go back and you look, that's not actually what happens, right? If you go and you look at just tariffs alone, you can see that, well, the Chinese manufacturer eats a little bit of it. Then the exporter eats a little bit of it. Then the, logistics company eats a little bit of it. The importer eats a little bit of it. And there can be an impact to the consumer. It's just way lower than people think. If you raise tariffs 10%, you don't get a 10% increase in consumer prices. Yep. Now I saw, and I apologize, I always get his name incorrect, but Alliance's, I think it's Mohammed El-Arian.
El-Arian.
Yep. He was on CNBC recently, and he talked about the fact that the consumer's been the least affected, right? Basically, this idea that the companies would raise the prices if they thought they could, just the elasticity of demand is not there, and therefore they're kind of eating that. But I think that the tariffs also, when you evaluate what happened, it's like, okay, the economists were wrong. but also they were not taking into account this whole deflationary force of AI and the productivity. And so you have to kind of evaluate the entire thing.
Yep.
I don't think you can cut out and say, okay, 5.4%, according to Atlanta Fed, GDP now number for Q4, 100 basis points goes to AI, 100 basis points goes here, whatever. And so the question becomes, if the AI crowd is correct and we get this exponential growth, Elon says GDP could be 10%. Is that a crazy number?
I mean, it's crazy in the fact that it's unthinkable, but at the same time, whenever I do on-site presentations, I always talk about the fact that you should think the unthinkable because AI is moving at such a fast pace and the cost of labor is such a big part of kind of the GDP side of what we do, meaning if GDP is 120 trillion, it's estimated that compensation is 60 trillion across the globe. Well, if you're going to replace 60 trillion with AI over the course of the next 5 years, not overnight for people who go, well, then there'll be no consumption. But the consumption, for better or worse, has been exacerbated where it's dominated by the top 10% of the people, not only in the country, but really across the globe. So the consumer doesn't fall off. So when Mohamed El-Arian talks about the consumer still spending, not all consumers are still spending and contributing the way that they were. One of the things that I think people should pay attention to on this conversation, the tariffs have done another thing. And so for Q4 GDP, the estimates so far from Atlanta GDP now are close to 6%. Now, the reason
Howard Lutnick's number.
Yeah. And
6%.
So the reason it's up there, we're still early in the data counting. So this is very early, but the reason is because the trade deficit is falling. And again, the trade deficit is the other side of this. We've been running a trade deficit in the country for a long time. That has led to a capital account surplus, meaning the money leaves the US, it goes to these other countries. The other countries come in and they buy our securities. So we have a capital. Well, the S&P underperformed the rest of the world last year. The dollar underperformed last year. And I think this is one of the things people are going to have to get used to is my belief is that we are in the early stages, as I've talked about, that the main theme is that AI will make things more productive. You're going to see profit margins continue to hang on the upside. But I think the rest of the world, because the cost of coding is going to zero, the ability for anyone to do it has become ubiquitous. That means companies around the world that are more bloated, that have run their businesses in Europe where they're not allowed to fire people. One of the greatest things for profit margins is if you have a bloated business. It's much easier to make your profit margins go up with AI when you're starting from 10% than if you're starting from 75%. And I think that's what we're starting to see because the companies that are at 75%, they're either coding companies, they're being disrupted by AI because software is now ubiquitous, or they're the hyperscalers and they're having to spend for more power. So I do think we're at a situation where everything is turning on its head, and 10% to me is not out of the question as a potential number, but I think it's because GDP as a calculation does not take into account intangibles. And I think when they go back and they relook at this, they're like, things were going a lot faster than we thought.
So what's interesting to me is the administration pretty much came out and said they wanted to go after that trade deficit. Right. And when they did it, obviously all the critics came yelling and screaming. Now, if you go back, there was a bunch of videos, and I think we even talked about it on one of the episodes where people had, Hillary Clinton or Chuck Schumer or whatever talking 20 years ago about the trade deficits being this huge problem, whatever. So I don't think it's a secret to either side of the aisle that this has been a problem for a while. I just think that they didn't believe we could address it. It does seem like the tariffs are being successful in addressing that. Now, the question becomes, if we continue down this path, and we do get GDP growing, we do keep inflation relatively low, and we're addressing the trade deficit, what happens in the market, right? You talked a little bit about the S&P underperforming, but if I'm sitting as an investor, do I need to address anything in my portfolio? Do I need to change anything if that is the scenario that plays out?
Yeah, and I think we're starting to see it. And I'm writing about this a lot. The Outlook paper I did for this year was all on the physical upgrade of the economy, but I always try to give people things they can listen to. It's very hard to say, hey, listen to Moonshots. There's a 3-hour podcast with Elon Musk.
It's excellent, though.
It's fantastic. And if you listen to it, forget about his conversations on Mars and his conversations on all the things you don't want to listen to. He made a statement in there which is really going to impact the investments that will work this year. And I'm going to talk a lot about this in the video over the weekend. But he said, we've reached the physical limits for AI on the power side. and that power is the ultimate constraint. He also said we have infinite demand for power, that we're at a point where the AI needs to get to AGI, to get to all these things, will never stop. But where we are now, after 2 years of the leaders of the stock market being the data center names, it wasn't just NVIDIA. It was GE Vernova. It was everybody who was involved in the construction of the data center, the transformer suppliers, the Siemens Energy, the Mitsubishi. So you go through transformers, you go through switching gear, you go through all of these different components. And then eventually you get to where we did starting in September of last year. And this was the inflection point. So I believe that when you have a theory on the markets in terms of an inflection point, you'll start to see it. Now, quality really got hurt badly in the second half last year. We started to see small caps outperform large caps, and we started to see the Mag 7 run into mud. And I think that's going to be a theme for the entire year. I believe the S&P 500 will see earnings growth of at least 15% this year. I think the S&P will be up 15%. But I think the top 40%, where there is absolutely a bubble of concentration, will underperform. Now, if they're flat to down 5%, those top 40%, but the market's up 15, you can do the math yourself. If the bottom 60% are making up for the down 5, that means these things are all up over 20%. That is a change, and that's the point that you go through. I think people have to adjust to the fact that we have reached the constraints. The models will get better every 6 months as they have, because the chip efficiency is growing rapidly. Rubin was announced at CES this week by NVIDIA. We have Blackwell rolling out this year. Only about 20% of the chips inside the data centers are Blackwell. They're far more efficient than the Hopper.
All right. So before we get into this chip thing, I think just let's help people understand what's happening, both in terms of the chips themselves and then this like rollout. So right now there are the majority of chips generally are these Hopper based chips. Then you have Blackwells, which maybe if we use a car analogy,
exactly.
You could start with a Honda. And then you kind of get upgraded a little bit more. Maybe you've got a little bit of a nicer, maybe a Porsche.
Yep.
And then there's the promise, or what was announced recently, of the like most amazing one of one Ferrari that eventually will come out as well. And that transition, you're saying 80% is Hopper, kind of the current majority version, and the Blackwells as they're rolling out. What is the efficiency gain just in that iteration change?
So when you get to the point, Blackwell, let's say it goes from a 10 gigawatt, so 10 gigawatts of power to do the AI we're doing now. That's not the actual number, but let's just say that's what it was. So you're now going with Blackwell down to only 5 gigawatts necessary.
So it cuts it in half.
Cuts it in half.
Okay.
Rubin, which was announced, will take it down to about 1.
So it's a 90% reduction.
90% reduction.
From the current version to what is, I guess, going to come out in 2027.
2027, yeah. Okay. So the reality is, even if we never build another data center other than the Blackwells that are rolling out this year, that percentage of the overall power usage will go from 20% to 30% to 40%. Colossus 2, Musk's, next part of Colossus is supposed to be done in the first quarter. He talked about it on the interview. That's a massive gain. So that's why the models, and you use the car. Let's go further back than a Honda. And let's say when you left horses and you started with cars, and the first car is the Hopper, then you get to a Porsche, which is the Rubin. Well, the first car is going a max of 15 miles an hour, and now the Porsche is going at 150 miles an hour. That's what you're talking about. So you're getting more performance per the watt, and that's what Jensen Huang talks about. The reason that's important, the models get better. You and I see it. We love using them, and I love using them more. Well, Goldman Sachs, Morgan Stanley, Eli Lilly, every company you can think of is going to start rolling out AI agents. Well, when you start rolling those out, the usage goes up. Well, you need more storage. You need more places to run these things. The hyperscalers need data centers to supply that. There is a bottleneck that is happening. So the companies, in my opinion, that are going to work this year, energy companies, because we need energy. And now it's all energy companies because of Venezuela, because of Greenland, because of defense, which I'm sure we'll get to. It's a major theme for me. But I think energy, we need power. It's not going away, and they're going to find ways to get it. Second thing is you're going to see financials, profitability story. You're going to see AI drug discovery. So the pharmaceuticals are going to be involved in this. Insurance companies, go through the list. Anybody that's a paper pusher that can benefit from AI is going to see their margins increase. And here's the story. The same way when ChatGPT came out, if you had the forward look to go, oh my God, we're going to need tons of GPUs, The gift that keeps on giving for the next 3 years is once efficiency gains start, I want people to think about this as Ozempic. You take that first pill, you lose a little bit of weight. As long as you stay on it, you're going to keep losing weight until you get to where you're as efficient in terms of your body as you can be. The same thing's going to happen with profit margins. Once you get more compute and you're replacing hiring and your profit margins are rising as a company that's been bloated, 3 years from now, it's going to be even better. So that story, people are going to start focusing on companies that are probably have a value component where estimate revisions are going higher. This is a major shift. And I've said it before, the biggest risk for this year is the size of growth funds versus the size of commodity funds, the size of growth versus value, the size of quant strategies that are momentum based. I think this is a massive shift that will last for more than a year. 3 years, this bottleneck will never go away. And Elon Musk said it. We can't get power fast enough.
Now, he is, I don't know if it started as a joke or not, but he's now starting to talk about data centers in space. Mm-hmm. And it wouldn't be believable unless he's already got, 9 million subscribers to Starlink and he's beaming the internet down from the sky. Does that unblock the bottleneck? If we can get these things there, because his whole thing is he's going to use the sun, which is, he used many different analogies to explain how powerful the sun is. Basically is this impossible for us to satiate the demand of the sun or the supply of the sun. Yep. So could that solve the problem? You don't look like a believer in data centers in space.
No. There's a difference between what can work and when it'll work.
Okay.
And I think we've learned with Elon Musk that he's seldom wrong on what can work. I mean, remember, he said, we'll have a Hyperloop. Well, we don't have a Hyperloop. We're never going to have a Hyperloop. And there's always some kind of constraints that comes from the current infrastructure, the government friction, whatever, that doesn't make it viable. And then some other cheaper region starts to come in. So I would never bet against him. He did talk about this and he said, when someone said, you can't do this, it's not possible. He's like, I think the guy sending rockets to Mars and with the most satellites has probably the best voice on what can be done on this. By the way, if you didn't hear it, I thought one of the great things was they brought up, all these conspiracy theories about aliens. I don't think you've asked me on here about whether I believe in that, but he said, if there were flying spaceships, I'd know. I've got 9,000 satellites out there looking at everything. So he makes a lot of comments on this 3-hour thing that if you really drill down and you pause, you're like, well, I guess you're right. He does know. So I don't think this is going to be a solving problem, but his points are valid. And I want to make sure people realize this is not a call that we're going to run out of power. But I do think for the market at some point this year, you will see a very, very violent fall in semiconductor stocks because the build out at some point, there's going to be an acknowledgement that this project won't get built because we don't have enough of the stuff power to connect to it. Mm-hmm. It's going to happen. And when those things start getting pushed out, people will freak out a lot. It won't stop the model advancements because the model advancements now are truly being driven by what people were worried about last year, which is a lot of efficiency. We will need the data centers to be built. The question is in 3 years, will we have a different solution that's more viable than the ones we have today?
Today's episode is brought to you by Fountain Life. Are you ready to seize the day that will change your life? Guaranteed. You invest in wealth creation every single day, but what's the point of it without an optimal health span? Award-winning Fountain Life is the world's most advanced longevity destination. And in just one day, they can map an exact and complete picture of your health profile. No guesswork and no blind spots. From there, they create a personalized plan that prevents disease and may even reverse aging using precision medicine and restorative therapeutics. It's available nowhere else. In other words, your energy supercharged, your memory sharper, your life extended, and so you can live without limits. It's the best investment you'll ever make. Receive $1,000 off the cost of a life-changing membership with Fountain Life when you schedule a call at fountainlife.com/pomp. That's fountainlife.com/pomp. What's interesting from that conversation is he talks about putting the solar panels in the desert.
Yep.
And he's like, he'll give shade to the lizards.
Yep.
But I do think that it is very weird to take Claude code, which now they're reporting the engineers at Anthropic are using Claude code to write code. They're not even writing, human written code, all the way tied to literally power. And if we want to connect this to the geopolitics, Germany made some climate change driven decisions a couple years ago. And they really kind of made themselves dependent on Russia, which you could argue gave Russia some confidence to kind of puff their chest out and start making some moves. Obviously, the conflict with Ukraine, all these different, but like it ultimately comes, energy is a big piece.
Yeah.
The United States, if you go and you look at the people who are critical of the military action of grabbing Maduro, oil and energy, right? So you start to look at this and you say, actually, the kind of recalibrating of, I'll call it the global world order and the AI story, the connectivity is energy and oil. Mm-hmm. Now, what we don't see, at least on a large scale, or the countries that have the most oil, the most energy, et cetera, they're not really leading. It's the United States and China. Those seem to be the two countries that are pushing the pace here. Do we see a change on the geopolitical landscape where the alliances have to be formed based on AI? Like, do we see people having to choose, like, I want to be in the American Western Hemisphere driven, AI world, and what that means for privacy, what that means for security, what that means for energy. All of that is kind of, one playbook. Mm-hmm. And then the China model is something that may be different or opposite. And then countries that are in the middle start have to making decisions.
Yeah. So I posted one thing this week outside of kind of my papers and Substacks. And it was a post on Venezuela because I had read a lot of things that people posted very focused on oil. And I think people have to understand that there's the power side, but we're not seeing natural gas and oil spike higher. Like, it's not happening. And the reason it's not happening is because the bottleneck is actually not with energy. We have plenty of energy in the United States of America. We have natural gas everywhere. And arguably other countries of the world could tap their natural gas as well. So we don't have a shortage of the commodity. We have a shortage of the infrastructure to get the commodity into the data centers for the AI. So that's why you see DRAM prices going through the roof. You see copper going through, silver going through. They're all necessary. And again, so people understand, copper could double from here. It doesn't change the cost of a data center. It is such a small component, which is why you want to be long copper. You want to be long silver. You don't want to be fading these things. This is not some speculative thing. This is hoarding because they're necessary for electrification. But to get back, the Venezuela thing, remember what stopped the trade war last year? It was rare earth. China went, we have rare earth. Okay, Venezuela has reserves of rare earth. Venezuela has some components that are necessary, but Venezuela is also an area in the Americas. So it is strategically an important place. What is Greenland? Greenland is a strategically important place, but it also has rare earth. At the end of the day, regardless of what people think, AI is causing a war problem. We are all worried about what's coming with AI because the military is changing in front of our eyes. So if it were just those two components, Greenland's popped up again. Venezuela, we go into a country and we announce an increase in the budget for defense, all within the same time period. So you can have people going, I guess we're going to war. No, I think we're preparing for the new military and making sure that the physical upgrade of phones, computers, automobiles, factories, and of the military is all happening. And that takes certain commodities. It is not a energy, oil, natural gas hoarding thing, because that is a bottleneck. The bottleneck is all the components that are necessary. It's not, you don't need the gas if you actually can't get the transformers and all the pieces. And that's why we've got bottlenecks that are happening inside the way to the data center, not actually in the ground at this point.
So there's a person who's online. It's got a anonymous or pseudonymous X account. I think very highly of the analysis that they've done on a lot of things. And recently, this person and I went and we got lunch. And unfortunately, he has zero interest in going on podcasts, being publicly known, et cetera. As he said to me, he goes, "I'm very well paid and I enjoy my life." And I said, "Okay, that's fair." But one of the things that he believes is not my idea. I wish I could give him credit by name, but it's definitely his idea. Is China, if you really break down the world's relationship with China, we will give you commodities and you will be the workplace of the world and you will turn around and give us finished products.
Yep.
If you want to contain China, if you want to contain their ideas, contain their actions, contain their kind of geographical footprint, you can try to fight on the finished product side, or you can starve them of the commodities on the way in. And it seems like from a strategic standpoint, the United States is able to kind of kill two birds with one stone by being able to get control of a lot of these commodities and say, hey, we need them. But also we may be able to maybe not completely starve, but at least limit the usage by what we deem as a, maybe at best economic rival, let alone, geopolitical adversary. And so as I see this play out, it then begs the question, okay, Venezuela, you know what I find very interesting? We are 1 week since Maduro was captured. What percentage of the American population cares anymore? It's a lower percentage than what it was last, Sunday morning. Yeah. It's not zero.
Yep.
But it is a pretty low percentage. It's kind of like the world already forgot that this all happened. And because things are moving so quickly, economically, geopolitically, et cetera.
Yep.
And with the internet, obviously, that's only going to accelerate over time. What I find fascinating is that I think the administration understands this. And so they're willing to maybe do things that otherwise you wouldn't do because, we toppled Saddam Hussein and we toppled Nicolas Maduro. One was a 20-year war. One was a 2.5 hour snatch and grab, and we were gone, right? Interestingly, you're talking about technology. We sent 150 airplanes and different air assets, but we still sent humans. We didn't send drones. We didn't send, right? Like there was a human component, and ultimately that was the differentiators. Our people were better than their people. So you start to look at this like the macro trends, but there's still these kind of anecdotal things where humans are going to be important, all that kind of stuff. Now, I bring it to the geopolitics because my question becomes Iran, Cuba, Mexico, Greenland. Those four seem to be on the chessboard right now. And Iran, maybe the Iranian people take care of that. And the United States doesn't want to go do nation building and they just say, hey, that's kind of a threat off the table. I don't know what the odds are. Maybe I'm at 30% right now. By the end of this year, the United States and Cuba, are looking at Cuba as like the next Puerto Rico or something. I don't know. The cartels, they seem to be, kind of in the crosshairs now. And it seems like that's going to be the next, kind of attack point. And so as you look at the geopolitics, you start to say to yourself, wait a minute. Is the United States and the cartels really about nearshoring? To your point, is Venezuela, how do you kind of think through the geopolitics and how that plays into, again, go back to the stock market, like what's going to go up?
Yeah. So again, I there's two parts of this that I think are important. You can't answer the questions of kind of the to use the game of risk. We're clearly talking about strategic locations that are important, and we want to create a tripolar world, meaning we want to separate being close to anybody, and we want to make sure that Russia, and at least from the U.S. military perspective, they're clearly targeting the Russia-China alliance and making sure that wherever they're aligned on something, whether it's Venezuela, where all three of them are aligned, including Iran, whether it was Iran. But when you go through this, China hasn't really responded. They didn't respond to Maduro in any kind of big way, and they didn't respond to Iran, which was last year. So there's clearly some kind of an agreement of like, here's what we're doing. We are not going to get ourselves involved with Taiwan. Because think about it. You've got Taiwan close to China. The U.S. can't go over there and do anything. So we're trying to onshore chips over here. In the case of Europe, you've got the Russia, European situation right there. And now we're targeting all these places. I really do want to emphasize to people that AI changes the nature of speed. And this is the part that I think is really hard. 50 years ago, having a base in Cuba or having anything for Russia to come over, yes, there's a missile component. That's what freaked people out. But from a ship component or anything like that, it's like, okay, doesn't matter. Now you're in hyper time. Like everything moves so much faster than it used to. And we're using lasers and the next thing. So I think the oceans and the distance and who your trading partners, it's one of the reasons why I've said repeatedly, I love Brazil as an investment. Now we'll get through the election this year, but Brazil has all the resources. It is clearly in a great negotiating point between the U.S. and China. It's a gigantic country with tons of vast things. You've got the U.S. already working with Malay. We left him out of the discussion, but there's a reason why the U.S. wants Malay working with them too. So I think the strategy from the Trump administration, and whether this is coming from the Pentagon, whether this is coming from other people inside the administration, there's clearly a desire to reshift the tables. And I think a lot of it is preparation for the future. But wherever there's rare earth, and I can't say this loud enough, and there's mining capabilities, They don't want that going to China. They don't want that being something. And even though Venezuela is not a big producer of rare earth, they do have deposits and they're close to Brazil. And I think the US probably learned their lesson with Africa, where China has a very big stranglehold, that we have to protect some of the minerals that are necessary for the AI technology of the future.
We could spend all day monitoring the situation and, kind of tracking all of this. But I also want to talk about Trump's announcement on the housing market. He says that he's going to ban institutional investors from buying single family homes. My understanding is that they own like 1% of single family homes, but he coupled it and that got all the attention. What I didn't see a lot of attention is he also said that Fannie and Freddie are going to buy $200 billion of mortgage-backed securities. So talk a little bit as to, it seems like Trump's going right after the housing market and he wants to get home prices down.
He does. And I think the driving factor, which is going to be a theme this year, is that right now prediction markets have the Democrats taking the House at 80%. So housing affordability is an issue. And we've talked about it since he made the statement of declaring a national emergency on housing. So clearly what they do in the administration, they know they have to do something on this. They want to do it at a time clearly when people have money coming in. So the one big beautiful bill, there's going to be a lot of surprises that come out. And I think it's important for people to recognize that when we were just talking about the GDP numbers, the 2 quarters before of 4%, and then currently GDP now at close to 6%, that's before we get the stimulus of the tax side in Q1. So let's assume we end up at 4% for Q3 and we get a 4% in Q1 because of all the stimulus stuff coming through without getting inflation. You'd be talking about year over year at 4%. You got to go a long way outside of COVID and the bounce back, a non-recessionary post period. So I do think that the housing market is part of his promise to the American people of the distribution of wealth issue and trying to find affordability for housing. I think it is a mistake to fade the fact that it's going to have an impact. And if you want to take one side, it's very, very difficult to believe that housing prices are not going to be impacted. Meaning, I would be surprised if you don't see house prices continue to be a zero inflationary component, if not a negative one, which is what we've been seeing, meaning they've been declining in terms of owner's equivalent rent. So I just take it as he's continuing with his campaign promise of trying to find a way to help middle America, people that are suffering out there. But the reality is it's not going to change the housing market. It's not going to be some big fix, but I think it's just additive to attempt to get the stimulus going in the way that we have using the tools that he has available to him.
Does he lose support by doing this? If you look at, I'm going to make a huge generalization, but like people generally are like, oh, the boomers own all the houses. The young people don't own any houses. He's got a pretty big base there of, older folks who, support him, his policies, et cetera. But he's essentially saying, like, imagine if it was a stock. He's like, I'm going to make your stock go down, right? People don't like that. So if he's like, I'm going to make home prices go down, those people probably don't want that to happen. So he's got kind of a weird situation where he's trying to help young people or people who don't own homes by getting home affordability. That sounds good. That's a positive. But he's also telling, people, hey, I'm going to make your largest asset in many cases lose value. How do you balance those?
So let's go this route. First of all, mortgage spreads have come in and mortgage rates have come down. If 10-year rates stay around where they are, and let's assume they stay just above 4% for the entire year, and we see short rates go down, I'm going to bet, based on the Fannie Freddie thing of we want you out there buying bonds, that his target is to move mortgage, a 30-year mortgage below 6%. If you knock house prices down 3%, if he does some other things to allow the home builders to kind of reduce costs, whatever the case, you're reducing the monthly cost through a mortgage price enough to get some increase in housing. And that's why I said this is not going to solve the problem. And I don't think people are going to worry, because the beauty of a house, you own it, you actually don't know what the price is until you try to sell it. So you might see national numbers come across and say house prices are down 4%. And nobody knows what that means because they don't know what the current value of their house is. So I don't think they're going to freak out on it.
And those people may be less likely to actually be selling their home, right?
Yeah.
To like leave their home. They're kind of been there for a long time. They're going to stay there.
The housing problem in the near term to me is not going to be an issue. But I do believe if I had to guess that even with the stock market going higher, I don't think you're going to see house price appreciation outside of maybe, places that wealthy people try to get something that doesn't go down in value. But I do think for the majority of people in the country, for their house, I do think you're going to see house prices come down. Eventually, when you get to humanoids, and this is, again, 5 years down the road, this is not this year's business. Humanoids will start being rolled out this year. They won't be impacting housing costs until we get into 2030. But I've said to everyone, I'm like, when you get to the point, you have to think the value of a home. I mean, I sold a home in New Jersey a few years ago, and I was shocked at the value of the home because I was involved with the building of it versus what people wanted. They didn't want a 10-year-old house. They wanted a new house. And it didn't matter if the quality of it wasn't as good as the older one. They wanted something new. And that seemed to be they told me that's young people just would rather buy something new. They care a lot about that side of it. Oh, okay. Well, the cost of it will go down with humanoids because labor is a big component of it. That's going to start hitting housing prices when we get into 2030. The cost of building a home from the humanoid side, the labor side, is going to go down. And I think a lot of other AI components. So the physical world, when we get to 2030, will make the housing problem there. So I think we're in a perma decline in house prices. I don't think you're ever going to see them go up again. And this fits in my fiat world of you start losing assets one by one. You lost private equity. Private credit's now a problem. Stocks outside of the US haven't performed well over the course of the last 20 years. And this is where it all feeds into Bitcoin and it feeds into gold. I think you have to start preparing for a world where the fiat assets, and in particular the growth Mag 7, start to be an issue. And you're looking for growth in something that can be up 100% in a year, 50% in a year. I don't think you're going to be able to find that the way you did the last few years.
When people hear you say this, I already know. So you're going to be like, that sounds insane, right? Mm-hmm. But I do think you can always look at the fringes, especially in the startup world, for a peek into the future. And the individual companies may not be the ones who eventually do it, but it's like the direction of progress is happening. How many times have you seen online some version of a 3D printed home or like a cement laid, kind of exterior? And the promise is always they can, build it in 72 hours, 96 hours, and it's, a third of the cost or, a tenth of the cost or whatever. Okay, maybe you don't want a cement or a 3D printed home, but you essentially are automating the labor via that machine. And so maybe you still want the same exact home, but it's coming, right? Yep. So I don't think that it's as crazy maybe as people originally think. What I do think is pretty interesting though, is as we think about humanoid robots, there was a story that came out about Hyundai, and they now have humanoids actively in production in their facilities. Now, they are the Boston Dynamics Atlas humanoid. And so, we're very terminally online over here. So we were online, saw the videos. My takeaway immediately, and now my entire explanation for what's happening in the world, is there are nerds in labs building super athletes to compete with humans. And we spent a lot of time talking about the AI component, and people are basically trying to build, synthetic superhuman intelligence to go and compete with knowledge workers. Sure. So the white collar space is now competing with software. Software is smarter, it's faster, it's cheaper, blah, 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 whatever. The humanoid space, I saw this Atlas robot, 6'2", 200 pounds of American-made machine. Can do things I can't do. Can be standing facing one direction. It can turn its torso 180 degrees and start walking the other way.
It's like a mini Pomp.
I can't do that. Trust me, it ain't a mini Pomp because I can't do that. It has human detection. So it can kind of see around and make sure it doesn't run into anything, right? It can, I forget what they call it, but like use its joints. It can basically rotate its arms, 360 degrees, right? All these things where you're just like, oh, wait a second. This isn't just to replace humans. They're actually building a better tool to do this work. And so you start to look at this and you're like, by the way, a human standing there can go and get the box faster and move it, right? Sure. But you just direction of progress. Here we go. What I don't yet understand is the transition period. And this to me, I think there's an economic argument, but then there is like just the realities of a workplace. The economic argument is the humanoid robots are going to come in. They're going to drop costs. It's going to make companies more productive. More productive means more profitable, means more valuable. Stocks go up. Okay, great. In this transition period, though, we are going to have a period where there are humans and robots working in the same factories. Whenever I see the Amazon, examples of like all the robots on the floor and stuff, I don't see any humans.
Sure.
But humanoids are built to do the jobs of humans. And so what are the ramifications? Like there's going to be a video of somebody pushing one of these over that leaks at some point from some factory that, hey, you're taking our jobs, whatever. It does feel like that transition period may actually be the point where, our country likes to protest. Our country likes to go on strike. Our country likes to, do these things. I don't hear anyone talk about transition. It's always like what's happening now and what's going to happen in 10 years. What are your thoughts about, that in-between period?
So there's an important thing here, and I want to make sure people connect this to why this is no longer a guess. So there's an element of a 3D printer building a house, which was always stupid. It's capable of building the frame of a house, but it's still a Roomba. And what I mean is it doesn't have intelligence. So the thing that I spend a lot of time on longevity and anti-aging, and I'll say to people, there's really not much difference between a human and a plant in the fact that our evolutionary makeup is that we're built to survive. We want to survive, but we have this thing in our head that allows us to seek success and pleasure and money and all these things. If you put a plant facing the flower, facing inside your apartment, it will, by the time you come back at the end of the day, it'll be facing out at the sun because it wants to survive. A 3D printer or a Roomba does not have intelligence. They don't have the ability to correct and think. You already can't push over a humanoid. We've all seen the videos, like you push it over, it goes back and it comes right back. It couldn't do that without the intelligence. So the problem is when people doubt this stuff, this is why AI is so important. And on that Atlas thing, if you watch the 60 minutes video, which I highly recommend people do, they talk about the fact that the difference is the intelligence. Artificial intelligence and the physical upgrade, the ability to do things. My iPhone, which I hate to keep talking about it in everything I do. I went to Baltimore yesterday. I never had to charge it. I was on the LLM the entire time down, writing papers, building stuff, thinking, conversing with it. Never ran out of power, and the thing was light speed on the Amtrak. I just don't think people realize that the world that we're in, the fact that every 6 months, intelligence is compounding faster, that you and I can build models that we couldn't build 9 months ago. If you're not using it, you can't understand the humanoid thing. That's why you have to use it, because the humanoids are coming. Humans will never be left out of the equation. They just won't, because there is an element of where I use the LLM to brainstorm with, but I'm still making the final decision. And that's the way businesses are going to be run. That's why I will say it now. Everyone running a business who wants to talk to me, who has run businesses in my career since I was 29, I care about revenue per employee as a number one thing. Now, that doesn't mean fire all the people, but what that does mean is you're trying to find people that are able to keep your revenue stream going at a reduced cost of the amount of people or the total compensation. The reason I bring this up is the number one arbitrage right now is to scour through these graduates that are not being hired. You need to hire the right ones, and they need curiosity. It's not about the best grades, because curious people know how to use AI, know how to brainstorm with it. And if your children watching this are curious people, force them to use it all day long. Do it at the table. It is so powerful, and it is going to allow the robots to have brains to do the things that we do, but they're not going to be as creative as us for at least the next decade, but they will be as physical as us for sure.
What are you worried about right now? You're like me. You're very optimistic, but what keeps you up at night? What are you worried about? Where do you see risk?
So I'm hopefully I speak for everyone on this. I have 4 kids. I worry mainly about my children. I've been through enough to know that bad things are going to happen. My best friend, the best man at my wedding, died in 9/11. I was searching for him down around the Twin Towers, and I remember seeing everyone coming out with stuff all over him. I stayed in the city with someone a twin who lost his twin brother inside there. We were going to every hospital. I've been through enough stuff in my lifetime to where I don't care if people think I'm stupid. I don't care if people don't like what I say. None of that bothers me. I'm a happy person. I'm optimistic. But for my kids, they're entering a world where if your kids graduate school and all they want to do is help people, which 3 of my daughters do, and they're making not enough money to be able to live in a city, I worry about how that's going to change. And by living in a city, are they safe? Because the cities aren't as safe. So that's what I worry about. That's the societal thing that has me focused on Bitcoin, because I believe capitalism is ending. And people don't want to hear that, but I believe it's ending because artificial intelligence, and Mark Andreessen talks about this as a VC person. He's like, this is the most unbelievable technology investment scene I've seen, but the competition is intense and the ability of getting a moat around your business is impossible. That is what is happening. And so I'm worried about how governments react to it, how parents react to it. I mean, how the schools react to it. I think there's a huge, huge problem that these institutions are doing the wrong thing when it comes to artificial intelligence. It's moving fast. You can't stop it. I think society is having a hard time adapt to it.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Today's episode is brought to you by Uphold. Are you someone who's tired of juggling multiple apps just to trade, earn, stake, or spend your crypto? Then listen up, because Uphold does all of that in one single unified platform. You can access 300 plus crypto and fiat currencies with an interface that works for you, whether you're a beginner or an expert. Uphold also features any-to-any swaps, where you can swap crypto to fiat, fiat to metals, and tokens to tokens directly in the app. If you prefer self-custody, Uphold's Vault gives you multi-sig security, key recovery, direct trading access, and peace of mind without giving up convenience. Uphold is also 100% reserved, meaning no fractional practices, and proof of reserves are updated every 30 seconds, so you can verify your assets anytime. For US users, you can even earn yield on dollars with a USD interest account. No fees, no minimums, and funds are insured up to $2.5 million through the Atomic Cash Sweep program. If you want one app for your entire digital asset life, check out Uphold today. Go to uphold.com to learn more. Uphold.com. Go check them out today. One thing I want to do before we leave is I'll give you a second to think about this because I didn't tell you this in advance, but maybe we can tell people one product or service that we discovered over the last week or so that we think is cool, that kind of shows the power of this stuff. For me, a friend of mine, he tweeted randomly, hey, here's a GitHub link that you guys can go check out and run locally to cancel subscriptions. Mm-hmm. And then it's got, a little bit of attention. And so he said, well, I'm going to turn it into a web page. And, I don't know, 36 hours later, he had a web page up. And so it's justcancel.io, I think is the URL. When you go to the landing page, it says just effing cancel. Yep. And if I remember correctly, the way that the product works is you take 3 bank statements or like CSVs from your bank, you upload it, and then it immediately tells you how much money you're spending on an annual basis on subscriptions. And then you can go and you can cancel these things. Again, feature, not like a huge company necessarily. Mm-hmm. Built in, let's give him the worst case scenario, a week. Yep. And the business model, you pay one time $5. Right? It's no subscription. There's no nonsense. Just, hey, you want to do this? You pay $5 one time, you go and you do it. And all I kept thinking to myself was, how many people over the years created a blog or this or that thing or whatever? And it was kind of like their thing on the side. This guy in a week created something that it's never going to most likely be a $50 million a year business. Yep. But he could probably replace his own annual salary if he worked at a company with this little tool that he is able to just kind of maintain, and it sits there and it provides value to a certain subset of people. Yep. And he takes his $5, one at a time. And I said to myself, oh my God, like that is where we're going to be in the future, is like all these, little tools that people are building or owning. And it's no different than people used to say, hey, I buy some real estate or whatever. It's just now in this digital world, given the tool set, you can create these things and their value, it is worth more. And then, what his promise is. If you don't save at least $5, I'll pay you your $5 back. Pretty good pitch, right?
I was going to answer the question with the only thing I can say with certainty that, I have not uploaded a new app on my phone, which is always a good indication that I found something in a while.
Sylvia app's not out yet.
That's true. Here's the main thing I'll say. I'm using Notion more and more every single day. And the reason I'm using Notion more and more every day is because I've recognized that the way that I consume information from the LLMs is speeding up so drastically. Like if I want to find a topic because I hear something interesting, hear it, see it, whatever, my process is now I go into Grok and I go through all the X posts and find me the most recent posts on this, whatever I just heard. It brings up the X post. I look at them and then I immediately click on it and I bring it to Notion and I never forget it. Now I used to do this.
And when you're clicking to go to the tweet or clicking to add it to Notion?
I'm clicking on the post and I'm clicking on share with, and it goes to Notion and I take it there. Now, this is how I collect information for the weekly videos. I'm trying to find nuggets of information. The reason I bring that up is it hit me this week when I was talking to a few leaders of companies. So I'm starting to get more consulting business and doing more presentations on how you can use AI. And I'm showing them how I go from a podcast to 20 ideas in an investment thing. And that process can be as little as 2 hours or 3 hours. But to go through there, and then there's probably 300 pages of research that's been generated behind it to come up with the names, and they've all gone through a filtering process. That is the investment process that happens at a hedge fund. Now, I've created prompts and tools to do them. What I realized this week, there were two things. So the things that are happening that I'm using more than ever before, that I think everyone should be using, I'm developing, 50 prompts a day now. And when I say developing, these are prompts that are 3 to 8 pages long. I've gotten to be an expert at, oh my God, you know what I want to do is I want to do X, Y, Z. I want to do this. Okay, create a prompt for that.
How are you doing? Hold on, back up. How are you creating, when people hear an 8-page prompt, they're like, oh my God, this guy's like a maniac, right? Walk through the process of like, what's one that you created? How'd you get the idea and how'd you do it?
So in X, and again, I highly recommend if you want to create your first prompt, go to go to Grok and just type in there, find me a post in X with a template for an efficient prompt. It'll come back with something and you have that, you copy that just right from the X post. You bring it into Grok or whatever your favorite LLM and say, here's what I want to do. I'm really going to do a deep research dive on this company. Take this prompt template and convert it using this as the template into doing what I want to do, what you mentioned at the top. It doesn't have to be investment. It could be anything you want. It could be your health, anything. It creates the prompt. And I say 3 to 8 pages because most templates of prompt engineering are like that. Right off the bat, you've done something that is 1,000 times better than just typing in, I want to do a research report on that. Because it's saying you're an expert in this field. You're going to do deep research. It's going to be this many pages. It's going to go through. It may ask you a question and it may say, I want to know specifically what you want to do. And then go run that prompt in all 4 different LLMs, see the results you get. And if you want, take those 4, upload them into Gemini and say, take these 4 and give me the best answer that combines the things that they overlap and use all 4 of these to create one report. That is the way that I do things. I'm taking 4, I view them as 4 individual people, the LLMs. They all have different skills. They all have different training models. They give me different answers and then I go through. So for everyone watching, prompts to me are building something. Now, there's one more thing I want to say. As someone, and you have been in this position many times. When you run a business, you always come up with things of like, okay, should we build it or should we buy it? So over time, because of software, we bought it because you're like, oh God, but you always had this thing. I remember at the hedge fund I was at, it was an old hedge fund. And I remember there was one person there that literally was there because the person coded in a language that nobody else knew how to code in anymore.
Great job security.
Yeah. And it was like, how do we get rid of the person? We can't get rid of them. They have job security. And I'm like, all right, that doesn't exist anymore because now you can build things like that. So buying is becoming less of a need. And that's why when you say which app, I think build all the time. And that's where the prompts come in. You have to get better at prompts because you start building things. Once you start building things more, your curiosity is fun because it's like, build me this. And I think everyone needs to get into that. It's just buy a Lego box with no instructions or buy a Lego box for your kid with instructions. You train them to do instructions. You're killing their curiosity. They go to schools. They have to pick a major. You're killing their curiosity. You use Google search. You're killing your curiosity. Curiosity is something that people have to get back in their lives.
You know what another real world example that I've seen that reminds me of this? we employ a lot of young people. We work with a lot of young people in other companies, et cetera. And you always can tell, especially when you work with somebody for a while, kind of what their range is, right? There's certain topics they're really good at. There's other topics that they don't know a lot about. And maybe you find somebody really special that knows a lot about a lot of different things. But usually there's kind of some range.
Yep.
And in the past, maybe there's some sort of situation, let's say you're hiring somebody and it's pretty clear. This person may even tell you, hey, I don't really understand a lot of legal stuff. Like I'm going to get
Yep.
And they'll come back with questions and it's like, oh, my lawyer told me to ask this question, or, my uncle is, an expert at this thing. And so you're like, okay, this person has smart people around them.
Mm-hmm.
I have noticed in the last 2 months or so, multiple young people asking very pointed questions about topics they don't even know how to spell.
Yeah.
And what I've come to the conclusion of is they're putting it into the LLMs, they're getting very, very good insights.
Yep.
And they're turning around and using it. And I think there's a lot of people who would say like, oh my God, that's like cheat. I love it.
Yeah.
I'm like, how resourceful of them to go and do this, because what it does is, one, it's going to make an entire organization better. But two is sometimes they're not even people who work at our companies. They're people we're interfacing with or whatever. And I love when we get back, these super complicated questions or suggestions on legal documents. And I'm like, you're a one-person company. There's no way you went and hired a lawyer to review this, whatever. The power of giving this intelligence to everyone to now use this in every single aspect of their life. I don't think we can measure from like an economic, growth standpoint. But what you described is less about like you've got some unique skill set of prompt building, and it's more of almost like understanding how to use the tools and embrace the curiosity. Mm-hmm. And then you can just think like, okay, how do you replicate that? Okay, that's for prompt building. Well, what about, every single thing that people use this for? And it does feel like there is a skill here that is not really taught in a school. Yeah. But once you understand it, you've got superpowers now.
You do. Let me. I know we're running late on time, but I think you'll appreciate.
Got all the time in the world for you.
I think you'll appreciate this story. So, one of the things that I think people eventually ask me is, so I started at Morgan Stanley in 1992 out of Manhattan College.
How is that possible? You were born in 95.
Yeah, I know. It's the appearance. Again, I told you, lots of injections. So I started Morgan Stanley in 1992 as an undergrad, coming out of a school that is not on the radar of anyone in the country, a little tiny liberal arts school. Okay. Morgan Stanley was filled with not only Ivy League kids, but MBAs. This was the decade of you go back to school and you come in. So somehow or another, I was able to start at the bottom end of the firm. And then in 1997, 5 years after I started, I was asked in 96, so 4 years later, to go to Brazil and open an office for the firm. So how does someone that young...
Big dog.
Okay, but here's the thing. The reason that happened is because, number one, like half of the trading floor left to go to another firm. So there weren't a lot of people left. So this is the luck portion of your life. So it's like, all right. And I was trading Mexico. The guy who was trying to open the office in Brazil, Harvard grad, spoke Portuguese and Spanish, still one of the mentors of my career. He got offered a bigger job in the US. Now, when he was building out the office in Brazil, he speaks the language. He wanted there to be a safe with a gun. He's like, so he turns to me one day. He's like, got a great opportunity. And I'm looking, I'm like, what great opportunity is this? He goes, I want you to go to Brazil. I'm like, what do you mean you're going to Brazil? He goes, no, I got a bigger job here, but I need someone to go down there. And I was like, now I had nothing to lose.
Yeah.
I started my first year making $30,000. They don't pay you more than doubling you at any firm. So even though I was moving up the ladder fast, I was moving up the ladder fast in pay. And the reason this story is important, I became a partner very quickly. Now, when you join Morgan Stanley out of an Ivy League school, you enter a class, you're an associate, and then there's a set framework of how quickly you can move up. Because I started with no silo, I was able to office a firm and become
unfettered.
I was able to have it. So I got lucky in the fact that by not paying attention in school, being an underachiever my whole life, but still having a good brain, and then finally using it, when I got to Morgan Stanley and enjoying the mathematics and the calculus and everything about it, I was able to move up the ladder. The reason that's important is because I excelled on curiosity. I excelled on fearlessness. And I think what you're seeing in kids, and I say this, why it's very hard to get a talented domain expert person to use artificial intelligence every single day. It's really hard. You have to use it all the time to bring that curiosity out. I have people say, well, I'm doing prompts. I'm like, are you using it at home? Like, if your kids are still young, you have to pay attention to them. You love them. You spend time with them. It's very hard to spend as much time as I do on it. When my kids are all off to school, I live by myself. I do this stuff. I don't work at a job. And that's the reason why I don't work at a job. So I think the more time you have to be creative and to develop and reframe that curiosity, it's an age of a mindset of an entrepreneur. Are you prepared to learn something new today? Because you can learn anything you want, to your point, in 3 hours. You may not be an expert, but you can then learn it broader and broader and broader. What everyone else is very narrow in their knowledge. A heart doctor knows about the heart, but may not know anything about the liver. I can learn about the liver, the heart, the kidney, and everything, and why they're connected, and ask bigger questions, because I'm not going to be a heart specialist. Mm-hmm. That is the problem, is we've specialized everyone. We've reduced the need of being a general or a polymath. AI is a true polymath. You can learn anything you want. Find those young people who are curious, who are fearless, and have very little to lose, and you're going to end up with some diamonds in the rough.
They're going to be in great shape. I also greatly benefited from not paying attention in school. I think it's, as someone with kids, I don't want them to hear this, but there is great value in having a filter as to like what matters and what doesn't matter, mm-hmm. right? And I remember sitting in some classes being like, dude, what? Come on, man. We're reading, some stupid book or whatever. Yep. I'm just like, I literally don't care. And I now think back, there's probably some teachers who they're like, wait, what? It's kind of like, you ever hear the stories of like somebody who was like, they knew I was either going to be, rich or in jail, right? Like there's like those kids always have like high volatility to them, right? Every high school has one, right? Whatever, or maybe a couple. I always wonder what those teachers think when like it goes the right way, right? Because for sure when it goes the wrong way, they're like, I knew it, right? Like that guy was always going to get in trouble.
One thing to correct you on, you're never going to have to worry about your kids listening to you speak on these things. As someone who already knows, when they get to a certain age,
they don't listen.
They don't listen to anything you say. And if someone says, your father's brilliant, you go, no, he's not. He's an idiot. I know him. I've spoken to him. He makes so many stupid decisions. Let me tell you this one. So they already know.
You people that are sitting in the room right now are going to laugh. But the other day, my daughter was in the office and she drew something. And so I said to her, hey, you should go try to sell it to someone in the office. And I handed that person $5 in single dollar bills. Uh-huh. And my daughter didn't know. She goes over, hey, do you want to buy this? Right. And give her the $5. And she comes running over to me. She goes, Dad, I got $5. I said, great. Let me see. And then she counts 1, 2, 3, 4, 5. I said, great. And I took one of them. And I said, now you have 4 because I took your tax away. And she burst out in tears, right? Burst out in tears. And I couldn't help but say to her, I feel the same way. Kids got to learn, right? All right. Can you, before we let everyone go, can you talk about the consulting work you're doing and if people are interested in that, where they can reach out to you?
Yeah. So this relationship that I have with 22V has worked out well on a variety of levels. I've mainly been doing this for the investment side. So bigger institutions. And what I've been showing them and trying to figure a way to demo this, and I will put videos on a paywall. And I know people have reached out saying when the paywall is going to be up. It takes a while to get a paywall where it's not just slop on the screen. So it will be done soon. I'm hoping in the next 2 weeks, at least to get it started. But
what are you using, a chisel?
Yeah.
Come on. You're using like a tombstone over
I got
there?
a lot of stuff,
AI,
man.
2 weeks. 2 weeks. Jesus. All right, maybe, going on vacation.
Maybe I'll bring it in here. Maybe I shouldn't go through that. Here's the end result. I am showing people at least how to go from podcasts to ideas, which is great for the investment community. But this translates into anything you want to learn, where you want an output on an idea of a business, whatever you want. Part of this thing is the prompt engineering, is showing how you use all the different models, which models are better. Every one of the models, from Perplexity to Claude to Grok to Gemini to ChatGPT, to me, they're like different individuals now. They all have a different expertise that I use. They're not the same. I don't know if you've run into that. I use them all for different things. And so I'll say, you do this, all 4 of you do this. And that's part of the orchestration. Is I've seen this before now talked about. If you go to a Broadway show and you watch the conductor, every one of the people playing the instruments are your LLMs. You are the conductor, and you have to learn how to conduct that orchestra to make it go fast and to be able to do the things that I'm doing. So I'm showing people more how to do that. So 22V is the place that right now they can find out how to get it, and I'll come to the office if they want, and we'll do the stuff. So,
all right. Well, listen, he's here every single week. I would jump all over that.
Are we going to talk about doing a live show?
A live show? We are going to do a live show in January. It's this. Yeah, in like 2 weeks we're going to do a live show, but it's at a conference. Next week we'll give you guys details because I don't know what the details are off the top. Do you know what the date is?
I think it's the 23rd.
The 23rd in Miami, January 23rd. Jordi and I are going to be doing a live recording at the Real Vision Crypto Gathering, I think it's called. So if you're going to be there, then come listen. Obviously, you can maybe even ask some questions. Although I don't know if I want people to ask questions because they've been listening to us for a long time. They got a lot of stuff they could, ask us about. But it's going to be fun.
It'll be good to see people.
January 23rd in Miami, we'll be there. But thank you for doing this. We'll see you guys next week.
See you next week.